Happy Monday, traders. It's 8:03 a.m. Chicago time on the 18th of March, 2019. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market it's looking like a mixed bag. The volatility index for March is at 13.55. Volatility getting sapped out of the market, up 0.56%. Mike's hot. Okay, good to know. Thank you. I'm not sure what's going on with these settings. Nobody's touching this mic. It's precious. We do have a mixed market. A mixed market today. And the DAX is a laggard on the indices, down 28 points. Overall, we're not up and down too much. The treasuries are off. The 10 years are off 3.5 ticks or 7 ticks, however you want to look at that. The NASDAQ's off 2 points. The S&P's up 1.25 points. So really just hanging out where we left on Friday. And overall, we are done. We are done with expiration, thank God, and we're coming into this week with a fresh overhaul, a fresh new contract. Just a reminder to those who trade crude oil. Crude oil rolled to May. K19 is the contract designation. K19 or K9. More and more feeds are moving to a 2-digit year, so K19. That's what's in front. The current price of crude is at $58.95. There's a premium delta of 30 cents between the last contract, April and March. Okay, so with rollover having been done, we can now go back to using our volume indicators and deltas and so on, although it was pretty much done on Thursday. In terms of what we've got ahead of us, today it's really some Eurozone numbers. Well, some Eurozone numbers came out earlier today. Balance of trade came in at 1.5. Consensus was -8. And for the U.S., NAHB Housing Market Index looking for 63, prior 62. And then the Reserve Bank of Australia. 1 second. And then the Reserve Bank of Australia. Tomorrow, in terms of what's coming out that's important, we do have the zoo survey coming out in Germany at about 6 a.m. Eastern. Is that correct? Man, that seems late. And then on Wednesday, we have FOMC. So prepare yourself for FOMC week. That announcement comes out at 2 p.m. Eastern on Wednesday. The expectation is steady as it goes, as they say. So that's what's on deck. Looking at... Wow, my voice today. Looking at what we were expecting on Friday versus what we got on Friday, if you recall, in either case, I was looking to get long around the 28.16 area, targeting 27.50. That's the key trade of the day, the big trade of the day. And it could either dip down as far down as 12 or hold the 16 and push. And it looks like scenario 2 was in play, went farther than I expected. Here's what we got on Friday. This is what we got on Friday. We dipped down to 17.25. Was looking again for the 16s. Didn't quite get there. An open auction on the open, and then we take off and push through that 27 area or so, and we got up into 36.50. It's did not have much of a pullback to mid on the way up. We've seen that quite a bit lately. Thursday was a balanced day, was an inside day, was completely balanced. And so the expectation on Friday was we're very, very likely to take off again to uncoil after coiling Thursday onto Wednesday. So that's what took place. And and then we're looking at, wow. And then we're looking at the market reopening at 27 yesterday, and pushing higher. We dipped down into 24. The area of potential support was 23.50 or so. Not sure why my weekly high is still in the wrong place there. 23.50 or so. That's the support underneath us. There's potential support underneath us, and it remained inside of Friday's range. The overall distribution on the volume profile for the overnight session is we have a double distribution with a cutoff at about 28 and a quarter, with a lot of the volume above the mid. We're pulling back now, but most of the volume's above the mid in the overnight session. We're above mid. We're at VWAP with a point of control above us. And it looks like it's really seeking higher again. So that's the mode that we're coming into this morning. And there's not much more to glean out of this profile or out of this overnight session. The volume is 111, which is the lowest we've seen in a bit of time. There's not much to take from here except that it just couldn't get below the 23.50. And is likely to continue to rotate higher based on the type of high that we have. So that's how things are shaping up in those terms. Looking at the big picture and where we are. So we've tackled these highs. Remember these highs we talked about? These swing highs. We took out the 28.12 a bit ago. And then we took out these two highs. We pushed through, and to me, this is fairly bullish. It's really continuing to push higher and higher and higher. And we're at the pivot point. We were at the pivot point at 23.50, and then 28.75 on Friday, which we blasted through. There's quite a spurt of buying on the way up. So the big picture is we're likely to continue higher. We've moved away from the big point of control, 27.37, way below us, about 100 points, and we're moving away from that. And so the expectation is we're likely to work ourselves towards 28.50, 2900, and so on. I know there are a lot of perma bears out there. There are also folks who are not perma bears who are looking at what looks like facts, and those facts might reveal that the market's overdone on the buy side. But I got to tell you, I'm not seeing anything here that says sell me. So I'm favoring the long side still. So looking at what we've got here, based on where we ended up on Friday. So let's look at the current action. This morning, we're opening right at the prior close, basically. The point of control is above us. Mid is right here. VWAP's right here in the overnight session. And so I'm expecting the open to be an open auction again, because it is opening right in the meat of Friday's acceptance, Friday's close. Looking for it to dip, actually. Open auction. Looking for it to test into that overnight point of control. And I'm looking for an impulse down, for a trip down into 23.50 this morning, and a push into the lower end of the range before we finish somewhere in the middle, somewhere in Friday's range. Okay, so test up, look for weakness on the high test, sell that weakness, sell into the buying weakness, sell into the buying weakness, and look for a test of 2350 as a key area. Hopefully we see that weakness around the overnight high at 34.75. 36.50 is the high of Friday, so it's right there. But overall, I'm looking for weakness on the way up to sell as a primary idea. I'm looking for somewhat of an inside day. Not expecting much range expansion. By the way, look at this volume on the close on Friday. Those options traders really getting into the futures here or something. I'm not sure what's causing that. Shoot, I just erased my first scenario. Scenario 1, open auction, push up into the overnight point of control, potentially test the overnight high or even higher, and I'm looking for an impulse down into and a test into 2350 to finish somewhere in the middle. That's scenario 1. Scenario 2, I'm looking for, again, a test of the overnight point of control, a move down into the point of control of Friday, a shift down into 2350, a break below, retest, and then move towards the lower end of the range. I'm looking for the market to revert back to the balance here, which is below us. So I'm looking for it to start to move towards this 2016 area from Friday. The third scenario, because we are rallying, starting to sound like Bill Clinton here. Because we're rallying, I'm looking for, if it does drop immediately, as soon as we see an impulse up, aiming for 36.50 and a push into 45 as a scenario 3, that's in line with the recent trend. I do look at today as somewhat of a resting day, but if it does not, if it tests lower and it's not able to sustain lower prices, then it's likely to float up as it's done here, and so that's scenario 3 for you right there. Okay, I want to remind everybody that we do have an event, a public event. They happen about once every 6 weeks or something. Under Convergent Trading, we're having Ira Harris coming in and zooming us up to the 30,000 foot level to look at the markets in a big picture fashion and to talk about global macro trading. Ira's just got an incredible amount of experience, 42 years, and he trades every day. And so we're looking, what do we look to extract from Ira's knowledge base is how he formulates a big picture plan and how he puts that into an execution in a trade. And that's what I'm expecting to discuss with him on Thursday. So to register, go to the number 2ct.pro, go to ct.pro/03-2019 for March 2019. IRA with a Y, Y-R-A. Thanks for joining, and hopefully you gained something today. Good luck. Take care.